Joining me now is Erik Woodring of Morgan Stanley. He's the top analyst. Nice to see you again. Welcome back.
Thank you, Scott. Good to be here.
What do you make of what Sievert has said today and how Steve characterized it and how we should be thinking about this?
Sure. I do have iPhone revenue flat in the December quarter right now, and that obviously does not imply a big bump in what would normally be a very big holiday sales quarter. So I am largely, at least directionally, in agreement with Steve, right? And why is that? Let's take a step back again. Right now, only 30% of the installed base can get access to the most basic features of Apple Intelligence. 70% of the installed base don't have access to Apple Intelligence. That is somewhat the key feature to upgrade this year. So if you can't have that key feature, you are most likely going to delay your purchase. We did a smartphone survey about a month ago that said 50% of iPhone users that have decided not to upgrade this year decided not to upgrade, or I should say, the lack of Apple Intelligence availability played a factor in their lack of upgrade. So it goes back to Apple Intelligence and AI. This is what consumers are looking for. 70% of them can't necessarily get it yet. More of those advanced features are to come. We still think more of the AI-driven upgrades are in the future as opposed to during the holiday period.
Let me throw something out there that might sound on its face completely wrong, if not crazy to think. The stock is up near 9% in a month. Just about a month ago, Donald Trump was reelected. We're going to have Trump 2.0. Some has been made of how Tim Cook, maybe more so and if not better than some of the other tech CEOs, has made it a point to develop a relationship and a good working relationship with the president the first time around. Apple has had some regulatory headwinds under the current administration. Some more may be in the offing, who knows. Do you think any part of that stock's move since the election is because of a perceived good relationship between Mr. Cook, Mr. Trump, and what his administration might mean for Apple from a regulatory standpoint?
I think there's a small part of it. I think your characterization of Tim Cook's relationship with Donald Trump is correct. Tim has done a magnificent job of balancing the kind of geopolitical risk of Xi, Joe Biden, and President-elect Trump. And so, we've seen historically that Apple has been willing to make some changes to their manufacturing base to appease the president-elect. We think that they'd be willing to do that again, and as a result, we think they'd perhaps be at less risk of tariffs in that sense. But from a pure regulatory standpoint, I think an anti-red tape, pro-business government is generally perceived as good. I don't think that's specific to Tim Cook, Apple, or anything just within tech. That's broadly speaking, I think, how the market is looking at things. But when it comes to specific regulation with Apple, there's two things that Apple is currently dealing with the DOJ. One is the Google DOJ investigation that is proceeding through the remedies phase right now. That, to me, is still the biggest risk that Apple faces. I'm not sure that a Trump administration is going to change that, because the Trump administration is the one that started that investigation. Maybe they take off the worst case scenario, sure, but I don't think a lot changes there. The other regulatory investigation is the direct DOJ investigation against Apple. That's going to take some time to play out. That maybe is a little bit more at risk of getting thrown away by the incoming president-elect. Really hard to say what that might be as we stand here today. But again, it's not necessarily less regulatory headwinds, so to speak. I don't think that those really change. I think it's more the pro-business nature, or at least perception of the incoming government, coupled with the fact that Tim Cook does have a good relationship with Donald Trump. And so in the event there were negatives that they were exposed to, he could help them get away with skirting some of those tariffs, for example.
But if you think that this is but a small part of the move, I'm not suggesting it's accounting for all of it. It just sort of struck me that was an interesting way to perhaps think about it. What would you attribute the largest part to why the stock has worked so well, even as we're talking about the upgrade cycle being so meh?
Sure. So I think there's two factors. One is just the general market, right? But we've seen a general market melt up, and I don't perceive to be or pretend to be the equity strategist here at Morgan Stanley. I leave that to Mike Wilson and his team. They do a great job. But I do think this melt up has helped Apple, generally speaking. It's a higher quality company. There's relative safety. There's also relative beta found in Apple because it is tied to consumer spending. If you believe that consumers are going to spend more in the future, that's generally going to be good for Apple. The other factor, I think, is still related to this AI upgrade cycle and investors gaining conviction or wanting to gain conviction in the upgrade cycle next year. I don't perceive that to be a fiscal year 25 catalyst from a numbers perspective, but historically, when you look back, Apple typically starts to outperform 6 to 9 months ahead of a product cycle. We're about 10 months ahead of a product cycle right now. Could you potentially be seeing the market pulling forward that outperformance to invest in an AI upgrade cycle today, simply because we know that's what's going to be one of the biggest features to drive upgrades next year? Theoretically, it's hard to say, but that's kind of the two different factors that I would bank on why we're seeing some outperformance here. Market and pulling forward of that outperformance time period.
I got you, Eric. Good to talk to you as always. Look forward to the next one. It's Erik Woodring.